Welcome back to Untangling Web3.
We've got another great episode for you today, but before that, we'd love it if you could drop a like on the video and subscribe to the channel.
It's the best way you can support the two of us and help the channel continue to grow.
And with that said, on with the show. Welcome back to Untangling Web3. It's been a minute, Alec. We haven't had an episode in a little while. We've been taking some stock, spending a little bit of time, sorting our shop for the new year. But today I think we had to talk about this because it's something that's on everyone's minds. You have to have been living under a rock to have not heard the term, the AI bubble, the impending bubble that everyone is supposedly worried about. So yeah, there's a lot of doom mongering and fear mongering out there on AI at the minute. Even though the models are still getting better all the time, I find I'm using them more and more. But yeah, so this is something that I think it's worth covering because there are some really interesting aspects to the story, and there are arguments kind of on either side, even though it can feel like everyone's just kind of doomsaying at the minute. But yeah, I think it's a good time to end the year by covering a slightly more worrying story. What do you think, Alec?
Yeah, I think you hit the nail on the head. Taking some stocks and shares, all that. That's what we're talking about today. Because if you're just a normal everyday user who's not worried about, the global economy, you're using GPT, you're using Gemini, you're using Claude, and you're thinking, my God, that these have come so far, even in the 2.5 years that we've really been starting to experience LLMs at the product level. Like they have come on bounds and leaps. Like they are absolutely incredible. It seems like every single week or every single month there is a new model that can do something that previously couldn't be done. And I think that's the really interesting thing about this stuff is that there's a lot of fear mongering coming from investors, VCs, the big money makers of the world. But if you're just an everyday user, consumer, you don't see that. You're just seeing some of the most incredible advancements and innovation that, in my mind, has ever happened, and at such a fast rate, such a level of competition that we haven't seen in an industry before. And I think, it's a really interesting time to be talking about this because we have a lot of users, a lot of people paying for these products, using these products, experiencing things that have never been possible before. But then there's still this kind of fear mongering and worry that, has the price been locked in? Are they making enough revenue? What does the future look like? So yeah, I think it's a great time to talk about this stuff.
Yeah, and I think for all the good, and like you said, it is an incredible time just from a purely tech perspective. There's doom mongering around what this means for the everyday person, right? Obviously, and in terms of jobs, that's something we've covered quite a lot before. I think this term AI bubble is very much centered around the financial story and what's happening in the markets broadly, because obviously this year, 2025, we've seen many all-time highs of the stock market. S&P 500 has been going gangbusters for most of the year. Despite some of the early tribulations we had in the kind of early months of the year. But obviously, it's clear that the market is heavily dominated by the Magnificent Seven now, or eight, I forget how many it is. But the major tech companies, obviously Nvidia, currently the largest company in the world, is driving a lot of this growth. It's been one of the fastest growing companies for a little while now, and they obviously are responsible for designing lots of the AI chips, the GPUs that are powering this whole revolution. So broadly, in a nutshell, what is the argument that we're in an AI bubble? Well, it's essentially that these AI stocks, these AI companies are in theory overvalued, right? So there's a bunch of different arguments around why they're trading at very high price to earnings ratios, which can generally signal that things are overpriced. That's one of the arguments. That's a narrative that's been there all year. And then around 2 months ago, there was this story, I think it was in Bloomberg, where they started showing there's actually a lot of kind of circular revenue sharing and investment models going around in the industry, right? Which is, I think that's where a lot of people started using this term AI bubble in a slightly different sense, that it's not just, okay, these companies are worth too much, but actually maybe there's some inflation of revenue going on. Maybe the story isn't quite as clear. So I think that's I think a good starting point to dig into the story.
Yeah, and I know we said we weren't going to talk about stats because there's so many stats and numbers that can kind of be thrown around in this that can overwhelm the listeners and definitely overwhelm us as well just looking at them. But I think you talked about historic highs in the stock market. And I was like, yeah, 2025 has been a great year for the stock market. It's been incredible. All I can think of is Trump speaking about that. You're going to be so tired of losing. You're going to be like, please stop winning. Let's stop. We need to stop winning and start losing. That meme. But 80% of all the gains have been AI related firms in 2025, which is bonkers. So it's like all of these historic highs in the last year have been almost entirely purely because of AI focused firms, which is a bit bonkers. So you kind of think then, okay, there's an absolute reliance right now on AI related firms propping up the stock market and all the gains we've seen in the last year. And then you're kind of thinking, okay, well, I think a lot of tech is like this. It's often a bet on the future. Like we live in a society in which you kind of the promise of tomorrow outweighs like what's possible today. So you're often kind of investing in the future and expecting gains, ROI. That's the kind of how the entire monetary system is based and the whole point of inflation and whatnot. So I think the point that people are trying to say here is that actually we've kind of over invested, maybe like the price is locked in, and are the basic economics of these firms, do they make sense at the end of the day? And like you're seeing really big names now, like the CEO, even people heavily invested in the space, like Sam Altman, obviously the CEO and founder of GPT and OpenAI. You've got Demis Hassabis, the DeepMind CEO. He's also saying that he's starting to think that even their systems, there is going to be a massive price correction because they're overinflated right now. So yeah, I guess it really makes sense to dive into some of the economics of like why that is. And you mentioned the idea of, okay, Nvidia is obviously a big player in this space, right? I think their market cap in the last 4 years has quadrupled, which is a bit bonkers. They're effectively building the infrastructure and the hardware that kind of power a lot of these US-based AI models. And one of the big things we're going to talk about is the fact that they will invest in a company, that company will use that investment to buy the hardware off Nvidia, and basically money is being passed around. But that's just capitalism and like basic economics, right? If I have £10 and I give £10 to Jack and Jack gives £10 to his mom and his mom gives £10 to me, like it's still the same £10, but on the balance sheet it says, okay, our economy is worth £30, £40. So yeah, it's really kind of, it's a bit complicated to dive into. Is this new? Is this novel? Is this something specific to AI? Or are people, the bears of the world, just trying to create some fear to maybe make some money?
Yeah, it's difficult. And I think we should obviously preface this whole conversation by saying we are very much not economists. We're not financial professionals. No, obviously no financial advice here anyway. But yeah, I think, okay, there's a couple of things to unpick in what you said, right? You touched on the kind of basic economic models of these companies. I think OpenAI is a good one as an example. So they're now topping revenues of around annualized 19 billion. So that sounds pretty good on paper, right? 19 billion in revenue. They're obviously also not making profit yet, right? Which is classically a sign of a healthy company. But as you say, a lot of the valuations of these kind of companies and the interest in investing seems to have been driven by the fact that they're pricing in future revenues, future profits, right? So people are making bets that the companies will be, the biggest companies in the world in 5, 10, 15 years time, based on the fact that this, the user base is going to grow significantly for these services that these guys offer. Now, there's been some kind of detractors around that as well. So the rate of expenditure of these companies, so they're not making profit. They got some decent revenue, but there's some evidence that the actual customer growth is slowing down. I think I saw that for OpenAI, in particular, the growth in new users or actual use of the product is not actually increasing as fast as you might expect for those future valuations, what they're kind of expecting in the future. And obviously, we've seen a similar model of massive tech companies that, as you said, it's not a new thing necessarily for AI. The whole blitz scaling model for tech companies has been around for ages, right? Where you just burn capital early on to be the winner in the category defining company for a product category, right? And obviously there's so much competition in the AI and a few kind of different verticals in it, but it seems like the blitz scaling model again for AI, where these companies don't need to be profitable in the short term. They just need to be the category winner in 5, 10, 15 years. Yeah. So, but that's kind of just a pure like base level. How are they making money? What's the revenue model? What's the long-term goal? Then the circular financing thing is really interesting because again, it doesn't seem like it's a new thing. I've seen lots of comparisons to, I can't remember if it was the dot-com bubble or a different bubble previously where you had, lots of companies, but and effectively what we're talking about here is one company invests in another on the proviso that that company then spends their money back
Mm.
to them, right? So it's like you're passing around the money bidirectionally, and it can go in circles, as we're seeing with the kind of Bloomberg reporting. But essentially, you might Nvidia, for example, is investing in OpenAI. You're giving them capital that they can then spend on Nvidia chips, right? So it's not necessarily created new value in the world, it's just passing it around, but it does allow the game to continue for a bit longer. The question is, how sustainable is this passing around of money, and how much is that feeding into overvaluation potentially of the companies? Because you'd think sophisticated investors, this is, they're not gonna this isn't going to surprise them, right? They're going to have access. They have access to this information. Maybe this is priced in, and it's not so worrying. But on the surface, it definitely looks like a worrying signal to me, at least. But yeah, I don't know, what do you think?
Yeah, I agree. I think, but it's, again, I think it's basic capitalism and the way we measure like productivity is quite strange that you can just pass the same money around between 10 people and all of a sudden you've got 10 times the amount of money when really that's not the case. You've got the same money that's just being passed around. I think you are right to focus on. I think we're kind of both working from first principles here when we talk about how it should work, and it should be: is there a problem? Are you solving a problem? Is there monetary value associated with the problem you're solving that you can then, take and actually make money from? And I think that one of the promises of AI and a lot of the focus is typically on the retail use case. Like I think the real boom that we've seen is normal everyday users just playing around with ChatGPT, making silly images, using it to help respond to emails, using it to help kind of, I don't know, draft things, create content, all this kind of stuff. Lots on social media, FUD, and all this kind of stuff. And the question there is like, how much productivity is that actually creating? Like a normal everyday user might not spend that much on it. The real promise in my mind was deploying this at the enterprise level, deploying this at the governmental level, replacing, maybe even replacing is too strong a word, but at least enhancing everyday jobs to create new value and maybe reduce the reliance on more people. So we saw like 2 years ago, I think it was, they were immediately saying, okay, we're not going to need developers in a year, 2 years' time. Is that the case? No, it's obviously not the case. Like people
Mm.
can do more, developers can do more. Maybe there's less need for junior developers or super junior developers in the world now, but we still need senior developers. We still need architects. We still need all these roles. Like I don't think we've seen the real kind of displacement of jobs that we were expecting at this stage, which in my mind is probably a good thing. But that was going to be the real value add in a lot of people's minds. Is okay, at an enterprise level, what jobs can this fully replace so I don't have to spend 100K a year on a developer, for example? That was the real value add, and we haven't seen that yet. Are we going to see it? I think we probably will. I think like the one is the technical angle. Like, can these models actually outperform a developer in the day to day? That's the one part. The other part is like culturally, are we ready for that? Like, are people ready to start replacing developers, having, instead of a person accountable, having a model accountable for delivering a project? I don't think culturally we're ready for that, especially when we talk in about normal companies that aren't at the frontier of this stuff. I think we're still at the experimental stage where people are, like I said, replacing junior developers, but not the mid to senior levels that are actually going to run and own a project.
Yeah, I agree. I think like ultimately, when I mentioned the kind of slowdown of growth in new customers, you have to remember that OpenAI had the fastest adopted product in human history, right? It was like, it's something crazy, like 1 million daily active users in some, it was like under a month or something
Mm.
crazy like that, and that was 3.5 years ago. So it's natural to kind of reach some kind of saturation of using a product like that when you've had such high growth, and that is all kind of retail customer end of day-to-day users like us. That enterprise growth is something that is going to take obviously longer to meet out and actually understand how much demand there is for it. I like you, I think fully expect there will be huge demand for it, forever into the future, right? So long as this game continues, because of the tools are getting better all the time, the models are getting better, and they ultimately obviously just can replace a lot of you know teams of people to do things. So yeah, parking the kind of human cost and implications aside on that, I think it's probably too early to tell. Are the valuations, if they are based on an assumption about huge enterprise adoption in the future and kind of mass replacement of the workforce, it's obviously way too early to know. Has this been priced in correctly or not? But yeah, so that's kind of the main. I think the main narrative around the circular financing right now, and people saying there's an AI bubble. So that's the second dimension, right? Number one, are these companies just too overvalued? Have we
Mm,
overvalued the impact of the tech? I think you and I are probably both on the side that, I doubt it. I
mm,
think that the value is probably there in the long term. The circular funding and financing and investment thing, I think, maybe looks quite unsustainable in the short term. But also, I get the argument as well that there's so much benefit already that's been brought by these models. And I think we'd all be quite angry as consumers if that all went away tomorrow, right? So there's
mm,
already been comparisons with like OpenAI being too big to fail, right? I think there's been stories around them saying, well, maybe we need the government to step in and help fund some of this, right? Because ultimately we are going to become very dependent on it. And if something like OpenAI, ceases to exist in the future, that will have a big negative knock on for the economy probably straight away.
mm.
So I think, yeah, there's lots of there's lots to say about that funding argument that maybe this is part of just keeping the game going for long enough that things can mature. So all this expenditure and working without profits, maybe that's just part of the cost of building this new insane industry that we've never seen before. But yeah, that's the main kind of second dimension to the bubble. I don't know where we should go next, Alec. I think we should probably talk about the hardware side of this because there's an interesting kind of dimension around the GPUs and the relationship between Nvidia and maybe TSMC as well. But I don't know if you want to cover anything before that because I definitely interested in that side of
Yeah,
things.
I think we should jump onto that. I think just before that, just because you mentioned the idea of governments and we talked about Nvidia, and Nvidia probably being the major player in this whole space. I mean, they're providing both the hardware and a lot of the investment into these AI companies, like you said, creating this kind of circular dependency. I think one of the most interesting things for me that's happened in recent weeks and months is around the kind of the US export controls of the Nvidia chips to China. Like there's two big players in the AI race. It's China and America's leading in a lot of ways. And Nvidia has a monopoly in a lot of people's minds on the kind of the advanced chips that power these AI models. And one of the interesting things that the current administration in the US did was actually starting to limit these advanced chips to China. And obviously, that's not very good for business if China's the second biggest player in this space. And then they opened up the doors. The administration realized, okay, we shouldn't have done this. That's a massive market for us. We do want to dominate this space still. And we want to create external revenue just outside the US, not just in the US. And as soon as they open up the doors, Beijing were like, no, we're going to make our own chips. Like they don't want to be dependent on these kind of external US companies. And again, I think this is the point here that I'm trying to make is we're kind of assuming a monopoly and a dominance from these US tech giants, the Magnificent Seven, Nvidia, all these people. But there are competitors coming out like that's only in the US domain. China is kind of offering in my opinion, like a much more efficient economical model for these systems that potentially isn't overinflated. And the reason they can do that is because they are so government backed. Like a lot of these are subsidized by the government. And it's just something we should start to think about if we're trying to work out, okay, are these companies overinflated? Are they going to dominate the world? Or can China create like a competitive, more economical, cheaper version of these? Like a good example of this is the DeepSeek model when that came out. Everyone assumed that ChatGPT was going to be the model that dominated absolutely everything. You pay per usage, they have a black box, complete control over that service. So effectively, if they dominate the landscape, they can charge whatever price they want. And then all of a sudden, DeepSeek came out, and what is it? Like I think most of the AI companies dropped by like 5 to 10% overnight because all of a sudden they've got this much cheaper, open, free model that anyone could potentially run on their own hardware. That destroys the entire business model of a lot of these AI companies. And I think they're two dynamics that I think we should really take into consideration. Is what are people doing outside the US, specifically China? They're trying to build models that are much cheaper. They're less compute focused, more efficiency focused, which again is very appealing to businesses, very appealing to everyday users potentially as well. And then the other one is free models versus premium AI models. Like, is that going to completely disrupt and undermine the business models of these top 7 AI companies around the world? Like they're things that I think we should really consider when we're looking at the future of, are these overinflated? Are they overpriced? Who's going to win?
Yeah, that's actually a really interesting way of looking at it, right? Because you're completely right in the sense that I think China is the way they're approaching AI. with DeepSeek, looking at more local LLMs as well. It's almost like America has, and arguably the rest of the world, has assumed that this will follow the same path and trajectory as like the cloud industry, right? So that everyone accesses AI and the capabilities of LLMs, and whatever it is in the future, robotics and things, via the giant cloud providers, right? Giant through cloud services, in the same way that we do most of the internet. Now, it's not an unreasonable bet, because ultimately convenience it tends to be king.
Mm.
So I think there'll be a huge role of these cloud providers. And when you look at that circular kind of funding bubble, and the structures there, some of the other big names in that are Microsoft, are Oracle, right? Some classic cloud providers in there. So a lot of that, the industry is quite heavily tied to that. And as you say, rightly so, America is incredibly compute focused right now. Whereas China is offering, I guess, a slightly alternative model, as you said, like lighter weight, maybe not so tied to these giant cloud providers. But yeah, it's interesting to see that it's so government led, and most countries in the world, especially that want to be major players, are now obviously putting out their own AI strategy, having to do major investment into the infrastructure as well behind it, which I think dovetails very nicely into the conversation around the chips themselves, because that's an arguably a third dimension to the AI bubble. Maybe not so much in how the bubble has grown, or if there
Mm.
is a bubble, the size of it, but it's more like a pin that could pop the bubble if it exists, right? Or even if it doesn't, because there's this kind of single point of failure that we should discuss. So yeah, I think one point that is not necessarily that well known, I guess with the average person like us, but it's really interesting, is the fact that Nvidia is primarily a chip designer, right? So they're designing the GPUs, which is incredibly difficult, and they are the world leaders in it for running these AI systems. But they don't really fabricate the chips themselves, like actually producing these wafers and these nanometer scale transistors. That's actually not a job they do, right? This is a lot of it is being done by the Taiwanese semiconductor manufacturing company TSMC, which is very much arguably this very very acute single point of failure, that if something went wrong, or they suddenly stop working, then maybe the Jenga of the whole industry could fall over quite quickly.
Yeah, and I think that it's quite interesting, right? That we're talking about US versus China in this global AI race, and then all of a sudden you mentioned Taiwan and the Taiwan Semiconductor Manufacturing Company. So there is obviously a potential issue there. I don't think we're going to go too much into the politics of it, but
Mm.
what happens if, say, all of a sudden TSMC goes out of operation or can no longer be accessed by the West? And I think they are starting to, I think a lot of the West is starting to wake up to this fact and trying to develop alternatives. But I think a way we can kind of think about this is what happened when there was export controls from China on critical minerals and precious metals and all this kind of stuff, right? The West lost its mind. Like all of a sudden, you're thinking, okay, we can't develop the most advanced platforms. What's it called? Like U.S. defense systems, F-3 fighter systems, what are they called? F-35 fighter jets, all this kind of stuff, and computers. If all of a sudden you start to bottleneck and have a complete reliance on one company or one supply chain, and then that no longer becomes accessible, which is a real possibility, right? It could be that that place doesn't become accessible in the next 2 to 3 years. Like, we're not going to go too much into that, but what does that mean for the AI dreams of the US and the West if that does happen? Well, it doesn't happen, right? Like, if that was to be
Yeah,
switched off today, there wouldn't be a future. And I think all of the Magnificent Seven would collapse over a course of a week, probably.
yeah, and I think it's worth mentioning, like, even geopolitical issues aside, I think the fact that, again, TSMC, to my understanding, is one of these category defining companies, in the sense that there is essentially no one else on the planet that has the chip fabrication capacity that they do. And to do, because we're talking about transistors. There's a really really good video, I think I'll link it in the description, that shows you what the size of these nanometer scale transistors are actually like, and it's mind boggling. Like, it's smaller than like DNA or something like that. The level you're getting to here, and they're manufacturing these with incredibly high precision. The facilities themselves, again, you can find videos of them, like, you have to control the air supply. You're having people in hazmat suits because any kind of contamination will massively, increase the failure rate, because there is a failure rate when you're manufacturing these kind of things. It can be very easy to go wrong. And actually, I think Samsung is one of the competitors to TSMC, and they have, one of the best. They're one of the better chip fabricators in the world after them, and their failure rates are so high. I think Nvidia actually tried to move to using them a couple of years ago, and they
Mm.
had to move back away because the failure rate was too high. They couldn't supply, something more like 30 or 40%, right, failure rate, whereas TSMC are much, much lower. And so just having a single point of failure like that in the industry, which for whatever reason, if it started failing, or anything went wrong in the plant, for some, if it burned down, right, or because someone left the lights on or something, then that's a huge issue. And it's gonna, I think we are seeing, as you said, like other countries, like America is now investing in chip fabrication sites. Like it started these, multi-billion dollar, maybe even, $100 billion. I can't remember the exact numbers, but they've started these projects to build their own local chip fab in America, lots of Texan-based ones, but they are going to take a long, long time to do. Like, could be 10
Mm.
years before these are operational, and there's no guarantee that they'll even be, competitive with TSMC at that point. So it is it's a really big bottleneck, like in terms of the geography of the AI landscape, that everything is just based on chips that come from essentially one company.
It's interesting because like the other dynamics we've talked about in this kind of bubble setup are much more, I guess, vague and ambiguous. Like the idea of kind of business models, like is there enough value? Are people overinflating things like the secular and circular kind of investment cycles and fabricated money and whatnot? But then TSMC is that's a very real dependency, right? If that all of a
Mm.
sudden switches off and can no longer be accessed by these big firms, that is an overnight switch from okay, go to no more. Like, do you think that's the biggest potential disruptor or the biggest potential kind of critical point of failure for this bubble, potential bubble, or the AI industry
Yeah,
rather than bubble?
I think it probably is the biggest potential trigger of a collapse in the industry, right? Because as you said, like after DeepSeek, the market reacted um, very quickly, and I think that something happening with TSMC, not being able to access it for whatever reason, would be a real sharp, acute cause for panic in the industry, because all that money that's in going into these those assumptions about AI growth in the future and who's going to be the market leader. Well, all of a sudden, if access to chips,
Mm,
goes away, then those assumptions get flipped on their head very quickly. The competition between different countries in the world can change very, very quickly as well. So yeah, I think it's not necessarily a core. It's not like a bubble dynamic in that sense, but it is the pin that could pop the bubble most quickly, as far as I see it. I don't think there's any other single thing, to my knowledge, that could do that. So yeah, it's definitely worth keeping an eye on. But yeah, as I say, I also don't see that kind of issue will go away anytime soon, because getting parity with TSMC in other countries is just going to take so much investment and so much time, that yeah, it's hard to see how that goes away quickly.
that makes sense. I think another one, like another risk factor that I'd like to bring up is you talked about Western reliance on compute and like AI's growth. It's not just logical, financial, this kind of stuff. It's quite physical, like we've been talking about with the hardware dependencies.
Mm.
And one thing we haven't mentioned is that hardware needs power, it needs cooling, it needs water, and those costs, especially in the West, are like rising and quite real. Like I think I've seen some stats that AI workloads account for around 10% of global data center power right now, and they think that's going to rise to about 30 to 50% at current rates by 2030. And then you've got like, so they're saying that by I think maybe this year or by maybe it's in the next couple of years, they think that the AI power use could exceed that of Bitcoin mining right at its peak, which obviously that caused an absolute kind of storm of people malcontent with this stuff. So I think that there's the energy usage as well, and this isn't something that a private company can necessarily solve instantly, right? Energy usage is a grid dependent. It's obviously sustainability compliance dependent where you're actually sourcing that. It tends to be quite government based, these big infrastructure projects. So it's not something that say an open AI of the world could just click their fingers and all of a sudden be able to generate 23 gigawatts of energy, right? These are multi-year huge projects that typically need government financial backing. Like we look at ourselves in the UK right now, our energy bills are skyrocketing, and we're also building data centers. So there's obviously a lot of pushback to be like, okay, well, if we're going to up our energy usage at data centers by 10%, that's going to mean more costs for everyday consumers and users in their homes. So I see there being like a wider problem of the compute leading to more demand of energy and also water usage. Like it's unbelievable the amount of water these places use as well. And I think there's going to be more and more, not just environmental pushback, but everyday, retail user pushback as well to be like, my energy bills, my water bills are going through the roof. How can you still be building more energy centers that make it a bit less reliable, a bit less easy to use, and obviously a lot more costly?
Yeah, I'm glad you also mentioned the water usage, because that's something that there's been a lot of criticism around recently, is how these companies are actually accounting for water usage. And, I think the creating metrics like water used per GPT call, right? That kind of thing, per prompt you send.
Mm,
It's very hard to estimate, and you question: do you include all of the water that went into cooling the systems while they were being trained, right? And all
mm,
that compute time before, or are you doing it on an ongoing basis? Actually, this call, what is it taking? Yeah, and again, it goes back into a geopolitical issue in energy dependency, water dependency in different countries, right? We don't live in a world where a lot of countries are self sufficient in this and that. They're incredibly reliant on energy sources elsewhere. Who knows? Maybe this we can reuse the argument, like I always say for Bitcoin, in that it should in theory create this push to have minimizing energy dependence, using renewable resources locally to power these kind of things and data centers. But again, as you say, like the pace of this industry is always going to cause problems here. Like I think there was a story around Meta was adding adding data center capability kind of just under tents, like under tarpaulin, near
mm.
their facilities, right? Because they just had to expand. They didn't have buildings yet, so they were just like putting them up inside tents, these servers, right? So the growth is outstripping natural resource demand pretty quickly at the minute.
I think one of the trends that I've been seeing as well is that I think that seems to be getting cheaper over time. Like right now, like it's expensive now, but it seems like a lot of the models, as we're getting more intelligent, like the previous models, like say a good example is GPT-4o, like the mini version, it is as advanced, if not more advanced than the current frontier model 2 years ago, but at a fraction of the price. I think that like frontier models training obviously costs a lot. It's like hundreds of millions to a billion per run or something like that, and that's compounding apparently. Like it's getting more and more to kind of train these frontier models, but the smaller models that kind of follow that are a bit more localized, a bit more efficient, are actually much more cost effective. So I hope that we are going to see a future in which you don't need to use the most advanced, the biggest model constantly, and you do get these kind of more energy efficient, compute efficient models that you can run locally or more efficiently over time. And I think that's something that I've started to notice as well. I don't always need the Opus 4.5. I can run smaller, more efficient models that are a lot cheaper, both in terms of cost and also in terms of energy. So that might be something that helps with some of the energy reliance that we've talked about. It's not always going to keep growing constantly. We can move to smaller models potentially in time.
Yeah, that's a really, really good point. I think, yeah, it's easy to lose sight of the fact that, just how much more capable these models are. That you've got the classic example of Will Smith eating the spaghetti, gets better and better every year. Google's Nano Banana this year was miles better than any previous image generator, and in a year or two's time, the cost of using that is probably going to be even lower. And again, you are seeing when these models come out, especially the smaller models like the Flash models and things for Gemini, they're being advertised on how they undercut price and compute cost of previous models as well. So yeah, that's actually a nice positive sign, I think. And yeah, maybe we'll reach a stage where the models that are good enough, right, for 99% of use cases, those kind of retail consumer use cases that we might use on a day-to-day basis, maybe those are much cheaper and have less of an impact on the economy and on the environment potentially.
Mm.
But yeah, so maybe just to kind of round off the story on the bubble. Um, Obviously, there's lots of comparisons going on with the dot-com bubble and other previous historic bubbles, especially related to tech. And one of the big stories surrounding this has been the behavior of Burry, right? So if you haven't heard of him, he's one of the guys from The Big Short, essentially. So one of the actual Wall Street traders who saw the 2008 financial crash coming, managed to bet against it, and made a killing. So he's often seen as one of the harbingers of predictions, and he's made a lot of predictions over the years. And just to add fuel to the flame, obviously he's now taken certain positions in the market where it looks like he's betting against the big AI players, right? So he's like shorting some of these major stocks now. What do you make of that?
Well, what's the phrase? I think you did it in the notes. It says he's early until he's suddenly right. So it might be that he's like predicted something that could happen in like many years' time or something like that. If you've watched The Big Short, you see that he predicted it like several weeks, if not months, before it actually happened. Yeah, it's tricky. I think that he's obviously famous for what happened with the mortgage collapse, but they're very different, right? I think that it's like that was a level of complexity that you couldn't explain in a 3-hour podcast. Like even having watched The Big Short, I still don't understand exactly what was going on. I think that there's a slight difference here in that value is being created by these systems, like value is being created by these models. It's just, is it less value than was predicted at this stage? Are they kind of capturing the value early enough or not? And I think I'm of the opinion of someone that uses multiple models every single day that this value will come to light. Like even if it's 3 to 5 years versus 1 to 2 years, I think that it is inevitable. I think that you see people that are completely reliant on these LLMs. They are replacing like entire workflows in businesses. They're replacing entire workflows in day-to-day life. Like people are using ChatGPT instead of Google search. And obviously Google search was an absolute moneymaker. And most people are using things like GPT to find out their content. It's just, how do you translate those clicks into money? Like some go down the productivity route, like your Copilot, your enterprise tools, all this kind of stuff when you're targeting businesses specifically. Some are going down the ads and search route, like Google, Meta, and GPT will probably go down that route more and more. And then others go down like the kind of the overall infrastructure lock-in, like your Azure, your AWS. It's just, how do they start to turn this attention into real money? And the only difference being things like Meta that kind of just had attention, just had ads, the burn rate of money is nowhere near as high as these AI firms. So you kind of have the difficulty of making money versus the difficulty of spending a lot of money. But I think it's inevitable. I think like there's a complete dependence on these systems now, and people will not move away from that dependence. It's just, how does that translate into value? And it might just take a bit longer than was previously expected.
Yeah. I think that's a good way of looking at it. And when you compare against previous bubbles, from my understanding, take the dot-com bubble for example, it's very easy to reach for that as a comparison. And is this just history repeating itself? But by all accounts, there are lots of differences in how the market is structured for the AI cycle and the previous, dot-com bubble cycle. So obviously, lots of the companies are, as we said, making a lot of revenue. They may not be profitable yet, but there is real revenue there. There's clearly demand for what these companies are building, and they are building genuinely valuable things, right? So that is a difference you have with a lot of the dot-com bubble, where you just have people putting the internet or www into their company names and getting funding off that. And I think it's not only the new entrants in, it's arguably a new category, but it's not just completely new entrants like OpenAI into the market. It's obviously these huge existing players, right? The rest of the Magnificent Seven. I mentioned Microsoft, Oracle. A lot of these companies are so well established. They've been the biggest companies in the world for many, many years. They are also in many cases quite cash rich, so they do have deep pockets to invest in this infrastructure. They're not startups, that are like growing at a kind of unnecessarily inflated rate.
Mm.
And I kind of, just on a very subjective view, I get the sense that people are relatively wise to the whole, putting AI in the title way of getting money, right? It's like we saw it a bit more with crypto, I think, a few years ago, and blockchain. But I think people are wise to the fact that, there's not a huge amount of difference between a lot of these models, and people are very aware of the best companies, the best performing companies, the best products in the space. Like it's not quite so finger in the air when it comes to how the market seems to be investing in these companies. So yeah, I'm less worried that there's a bubble here related to pure misvaluation and
Mm.
kind of completely missing the mark. It's more, I think the bigger problem is just the fact that it's on such a big scale, and it is the biggest, arguably the fastest, biggest growing industry right now, and how big the bets are going into it, how long term the bets are. I guess just it's purely the scale for me that is the worrying aspect of this, alongside with all the other, the trigger point with TSMC and the kind of and the energy kind of resource questions as well.
I think the evidence for, I think a big thing is, I do think there are not the Magnificent Seven per se. I think that one's a much more complicated one. But when you see these startups that are just AI enabled, insert whatever term, and
GPT
they're
wrappers.
yeah, exactly, just GPT wrappers, and then they have incredibly high valuations without any usage. They're just, the whole game plan is just to have AI plus some workflow. And then, like you said, there's these memes that are popping up everywhere where it's like, well, OpenAI just killed my entire business model, and then 1,000 startups get killed just from one upgrade from GPT. I think that stuff makes a lot of sense. That a lot of investors are losing a lot of money because people are getting overly excited. They're thinking that, oh, maybe the Magnificent Seven, all the price now is cashed in, all the price is locked in. I need to find a smaller, more disruptive model where I can actually make money. And I imagine that's where a lot of people will lose money. I think a big thing you see is so many companies are investing in this space at an enterprise level and not seeing the ROI. Like, a big thing that I've seen more and more is that it's because a lot of these people are using Copilot. And no offense to Copilot, but Copilot sucks. Like, when you're kind of a big enterprise, you want to go with something that's safe, secure, built into your workflows, but you're not using the top end models. Like, I've used Copilot. I don't like Copilot. It's probably where GPT was at like 2 years ago. And I think we're going to see a maturity of enterprise use cases. And I think, it's still fairly early. Like, the big enterprises anyway, we're only jumping on AI usage in the past year. I think this is so disruptive and so novel and so new. It's going to take a few more years for enterprises to really feel comfortable deploying this stuff and getting the ROI and potentially replacing entire workflows with this stuff. So yeah, I personally think it's coming. I think, like, not financial advice, there will be a small correction, but I think like it's long-term inevitable. The short-term correction will probably just coincide with like wider geopolitical kind of recession, fear factors and all this kind of stuff. But I think long-term on this space, like, AI is kind of inevitable in my opinion.
Yes, doing your Thanos impression there. AI is inevitable. Yeah, I think that's a really good point maybe to end on, is just the fact that obviously there are economic cycles, there are recessions, there are booms and busts, and people have been predicting that there will be, a huge crash in the global financial markets anyway for a little while now. So, these things happen, and I think maybe this one's just being branded the AI bubble because it is the hot ticket right now, the biggest tech story, and the biggest company in the world, Nvidia, is driving the growth of this, and along with the other Magnificent Seven. So yeah, I think it's not a completely Grinch story. It's an interesting one, and I think maybe just to end, the purpose of today's episode was just to dig into what are the arguments around is there an AI bubble, and some of the more nuanced stories around the tech behind that, and the markets that are propping up the industry right now. So yeah, lots for us all to learn and lots to stay safe out there with. But yeah, this was quite a fun one, Alec. I enjoyed this.
Yeah, I enjoyed it too. I think like the promise of AI is huge, and I think there's so much it can do. But there are a lot of bigger dependencies outside of just the AI companies that we've talked about. Some of the manufacturing dependencies, the chip dependencies, the wider geopolitical dependencies, the energy dependencies. There's a lot of dependencies that I think these big AI companies will require to keep growing the way in which they're growing. And with dependencies comes risk. So yeah, stay safe out there. Do your own research. Don't just rely on me and Jack. And yeah, thanks for listening, wherever you may be. And join us next time to untangle a little more of Web3. Thanks for tuning in to another episode of Untangling Web3.
Don't forget to like and subscribe, and to follow us on social media. It really does help us out.
The views we express here are our own and do not reflect the views of our employers.
And with that, we'll see you next time.